how does a stock plummet from an all-time high of $161 down to a recent low of just $3.20, yet still command these aggressive strong buy ratings from Wall Street analysts?
Right. I mean, is it a massive misunderstood opportunity to buy a deeply undervalued asset
And
or
is this just the ultimate value trap waiting to wipe out retail investors?
welcome to today's deep dive. Today is Monday, April 13th, 2026, and we are, putting Bitmine Immersion Technologies, Inc. under the microscope. That's ticker symbol BMNR.
And before we get into the mechanisms behind these wild price targets, we really need to set the ground rules here.
Absolutely.
What we are doing today is just a natural human debate looking strictly at the data and the market mechanics. This is entirely for educational purposes and is absolutely not financial advice.
Definitely not. But to join us in unpacking whether BMNR is a steal or a trap, make sure you hit that like button, subscribe to our YouTube channel, and get ready to defend your position in the comments. Leaving your feedback down there is compulsory today because this debate really requires your input. It really does. So let's jump right in. The perfect place to start is the massive news that dropped this morning because it completely redefines what BMNR actually is at this point.
Oh, for sure. As of today, the company officially hit this crazy milestone. They're holding 4.875 million Ethereum tokens on their balance sheet.
Yeah.
Which that stash is valued at roughly $11.8 billion.
Unbelievable.
They now control over 4% of the entire global Ethereum supply. Like 4%.
Right. It is a staggering concentration of assets. I mean, if you're analyzing them like a traditional software company or even, traditional crypto mining operation, you are using the completely wrong map.
Yeah, you're lost.
Exactly. BMNR has transitioned almost entirely into what we call the crypto treasury company. Their primary business is no longer building software or running data centers.
Right? It's just hoarding.
Basically, yeah. It's acquiring, holding, and leveraging a single digital asset.
And they are definitely leaning hard into that new identity. I mean, on April 9th, they successfully uplisted from the NYSE American Exchange to the NYSE main board.
Huge move.
Yeah, and they expanded their share repurchase program to a massive $4 billion. Plus, they just launched MAVAN, that's the Made in America Validator Network,
Right.
which is aimed at institutional Ethereum staking. And get this, they are projecting $310 million in annual rewards from that platform alone.
Yeah, so the MAVAN launch is it's really the critical piece of the puzzle here. To understand why BMNR commands such intense interest from analysts, we have to unpack what staking actually means in this context.
Right, because it's not mining anymore.
Exactly. A few years ago, crypto mining was all about proof of work, right? Warehouses full of computers solving complex math puzzles to win digital tokens.
Which is incredibly energy intensive and, operationally expensive.
Right. But Ethereum shifted away from that to a system called proof of stake.
So wait, instead of burning electricity to solve math puzzles, how do they actually secure the network and earn that $310 million yield?
So in a proof of stake system, you secure the network by locking up your existing tokens as collateral.
Okay.
Because BMNR holds $11.8 billion in Ethereum, they can pledge those tokens to validate transactions on the blockchain. If they validate correctly, they earn a steady yield.
So it's kind of like depositing funds into a high-yield treasury bond, where the bond itself powers the financial system.
That's a perfect way to look at it.
Yeah.
And if they act maliciously, their collateral gets slashed. But by launching MAVAN, BMNR is essentially taking their massive static treasury and turning it into this interest-bearing engine.
That makes sense conceptually, but it brings up this glaring mathematical contradiction. I mean, if BMNR is sitting on $11.8 billion in Ethereum, why is its market cap today only $9.69 billion?
It's the multi-billion-dollar question.
Right. The market is valuing the entire company at $2 billion less than the cash equivalent assets just sitting in its digital wallet. To figure out why, you really have to look under the hood at their fiscal 2025 financials. And honestly, the numbers look completely broken.
Oh, they do. The financial statements of a crypto treasury company are notoriously difficult to parse because, well, traditional accounting rules were simply not built to handle digital asset hoarding at this scale.
Let me just validate anyone listening who might be confused by these filings, because if you read the income statement, you might actually think your eyes are playing tricks on you.
Yeah, it's wild.
Their total annual revenue for the year is tiny. It's just $6.1 million. But their net income shows a massive $348.6 million gain. Like, how does a company make $348 million on $6 million of actual business?
It gets weirder, too.
It does. If you dig into the quarterly data from November 2025, it shows a net income of negative 95.3 billion.
Right.
But that figure was reported in a Mexican peso context. I mean, what is happening?
Okay, so the Mexican peso anomaly is a perfect example of how messy international reporting segments can get when companies try to translate hypervolatile assets across different fiat currencies.
It's just a total headache.
Right. But that 348 million net income on just 6 million in revenue, that's the real trap for casual investors.
Because it looks so profitable.
Exactly. But that massive gain is a mirage created by GAAP.
Yeah.
The generally accepted accounting principles.
So the accounting rules are forcing them to claim phantom profits.
Essentially, yes. GAAP uses a mark-to-market rule for certain crypto assets. This means that at the end of the reporting period, BMNR has to record the value of its Ethereum based on the current market price.
Ah, I see.
So if Ethereum goes up by 20% in December, BMNR has to record a massive paper gain on its income statement, even if they didn't sell a single token.
And if Ethereum drops, they record a massive paper loss.
Exactly. The income statement is completely hijacked by the price swings of the underlying crypto asset. It completely masks the actual day-to-day operational performance of the business.
Wow. Okay, and the balance sheet and the cash flow statement paint an even wilder picture.
Oh, yeah.
Total assets are massive at $8.8 billion, with total equity at $8.69 billion. They are holding $887.7 million in cash and short-term investments against just $235.7 million in total liabilities.
Which sounds incredibly healthy.
Right, on the surface. But then you look at cash flow. Cash from operations is negative $4.15 million. Free cash flow is negative $5.2 million.
Right.
And capital expenditures, a staggering negative $7.4 billion.
And that $7.4 billion in negative capex is without a doubt the most important number in their filing.
Really? Why is that the key?
Because in a traditional company, capital expenditure means you are building factories, buying delivery trucks, or, investing in research and development.
Building the business.
Right. For BMNR, that negative $7.4 billion represents heavy, aggressive, open market buying of Ethereum.
Okay, I have to challenge the core business model here then. They have billions on the balance sheet, but their operational cash flow is negative, and they are bleeding $7.4 billion just to buy more digital tokens. How is this a sustainable corporate entity? Honestly, how is this not just a highly leveraged hedge fund masquerading as a publicly traded company?
You are hitting on the exact structural tension that has Wall Street entirely divided right now. I mean, BMNR is blurring the line between an operating company and an exchange-traded fund.
Yeah, an ETF with extra steps.
Exactly. The sustainability of this model relies entirely on two things: the continued price appreciation of Ethereum and their ability to generate that new MAVAN staking yield to cover their massive capital costs.
Right.
Because those accounting rules completely distort the bottom line, traditional analysts are having a spectacular breakdown trying to figure out what this company is actually worth.
And that breakdown is highly visible in the analyst ratings right now. I mean, the consensus rating on BMNR is technically a strong buy. It's sitting at a 4.5 out of 5 score with an average price target of $36.
Which sounds great, but...
Well, we are seeing prominent negative signals pop up. Like B. Riley Securities, for example, just aggressively lowered their price target from 47 down to 30.
Yeah, and that downgrade to 30 is still above the current trading price. But it indicates a serious cooling of institutional expectations regarding, just how much leverage the market will tolerate.
So the core debate between these analysts really comes down to two completely contradictory ways of valuing the company.
Right.
The undervalued camp looks strictly at the price-to-book ratio. BMNR trades at a PB of just 1.9x. The industry average for tech and mining is around 2.5x.
So you are buying this company at a deep discount to its net asset value.
Exactly. You are basically buying $1 worth of Ethereum for roughly 90 cents and getting the operational business for free.
But, and this is a big but, the value trap camp takes the exact opposite approach. They run a discounted cash flow model, or a DCF.
Right, which looks at the actual cash.
Exactly. A DCF model attempts to value a company based strictly on the actual cash its operations will produce in the future. If you run a DCF on BMNR based purely on their traditional operations, completely ignoring the massive digital hoard in their wallet, the fair value of the stock drops to a meager 18 cents per share.
Wait, 18 cents? That is a terrifying discrepancy.
Yeah.
You have one metric saying it's an absolute steal and another saying it's effectively worthless.
Right. And this divergence creates an incredibly dangerous environment for retail traders.
Yeah.
When you buy BMNR, you have to understand that you are buying a vault, not a factory.
I love that analogy. A vault, not a factory.
Yeah, because a factory produces cash flow, right? A vault just holds an asset. So when a retail investor logs into a brokerage app and sees a price-to-book ratio of 0.9x, they might think the market has mispriced a traditional business.
Oh, I see.
But the core traditional operations generate literal pennies. If you buy this stock thinking it's a traditional value play based on cash fundamentals,
Yeah.
you are stepping blindly into a trap.
That makes so much sense. So with Wall Street fighting over the valuation models, we need to look at how the actual market is trading the stock today. Currently, BMNR is sitting at 21.46.
Okay.
It's up slightly today, about 0.80%, with a day range of 20.68 to 22.03. But we cannot ignore the historical context here. This stock dropped from $161 down to 3.10 over the last 52 weeks.
That's just brutal volatility.
It is, and volume today is 21.8 million shares, which is actually lagging significantly behind the 65-day average of 45.4 million.
And that lower volume today, even despite the massive news about the NYSE uplisting and the Ethereum milestone, well, it suggests the broader market is hesitating.
Just waiting to see what happens.
Exactly. Institutional buyers are digesting the data, waiting to see if this new staking yield actually materializes before they commit serious capital.
Well, the technical indicators on the chart are painting a picture of a fierce psychological tug of war. The trend and momentum right now are categorized as bearish to neutral in the long term, but bullish in the short term.
Okay, so a bit of a mixed bag.
Very mixed. Immediate support is at the 18.50 pivot point, with a hard floor around 15.82. But the real story is the resistance. There is an immediate ceiling at 22.04, and looming above all of that is the 200-day moving average, which is sitting way up at 37.33.
Yeah, the 200-day moving average is a massive overhead cloud, and it really represents trapped buyers.
Trapped buyers, how so?
Well, anyone who bought into the BMNR hype earlier in the year when the stock was trading in the 40s or 50s is currently heavily underwater.
Oh,
And every time the price attempts to rally and creeps up toward that $30 mark, those trapped investors use the upward momentum as an opportunity to sell and just break even.
which creates a massive wall of selling pressure.
Exactly. It's a ceiling that's hard to break through.
And the shorter-term indicators reflect that exact indecision. The Relative Strength Index, or RSI, is sitting at 52.58, which is perfectly neutral, neither overbought nor oversold.
Right.
And the MASD, which measures the relationship between two moving averages to gauge momentum, is giving highly mixed signals.
What's it showing?
It is reading plus 0.25 on the short-term charts, but if you pan out to a slightly longer time frame, some platforms are flagging it as a firm sell at negative 0.50.
When you see a neutral RSI combined with a conflicting MASD like that, it tells you that the algorithms and momentum traders have absolutely no clear conviction on direction.
So the stock is just floating on the news cycle.
Pretty much.
Well, that brings us to the order flow, and specifically who is betting against the company. Short interest right now sits at 36.71 million shares, which is about 8.48% of the available float.
Okay.
But the critical metric here is the days to cover, which is sitting incredibly low at just 0.80. With a number that low, short sellers can buy back all their borrowed shares in less than a single day of average trading.
Wow.
Right. They can just walk out the front door. There is no trap for them. So we cannot really rely on a short squeeze to drive the price up, can we?
No, and that is a vital observation for anyone hoping for a sudden parabolic spike.
Yeah.
A short squeeze happens when short sellers are trapped and forced to panic buy the stock at any price to cover their positions.
Right, like we saw with GameStop.
Exactly. But at 0.80 days to cover, they are not trapped at all. Any sustained upward movement in BMNR's stock price has to be driven by genuine, conviction-driven buyers.
You need real capital.
Yes, you need real capital deciding that holding this stock is a better strategy than just buying Ethereum directly on a crypto exchange.
Okay, so if the recovery relies entirely on genuine buyers, we need to map out what they're actually buying into. Let's look at the ultimate best-case recovery scenario versus the worst-case continuation lower. For the bull case, the argument is that BMNR acts as a highly liquid, regulated proxy for Ethereum, but trades at a discount to the underlying asset. And with the new MAVAN platform, they are projecting $310 million in institutional staking yield.
Right.
They aren't trying to time the market. They are earning a massive recurring interest payment simply for existing and holding the collateral.
And if the MAM platform successfully secures that $310 million in annual rewards, The entire narrative around the company's operational cash flow changes entirely.
It flips the script.
Completely. Suddenly, that discounted cash flow model we talked about earlier isn't projecting pennies, it's projecting hundreds of millions in legitimate, verifiable network revenue.
Wow.
That is the engine that could turn this from a speculative static treasury into a dominant, cash flow positive financial institution.
But, and we have to talk about this, the bear case outlines some terrifying downside risks. We already mentioned the extreme volatility with regular intraday swings of 10% or more.
Which is stomach churning on its own.
Yeah. But the biggest, most existential risk is execution, specifically around their leverage. That $7.4 billion in capital expenditure wasn't just spare change they generated from selling software.
No, definitely not.
They rely heavily on borrowing to fund these massive open market Ethereum purchases.
And that leverage is exactly why retail traders often get financially ruined playing this stock. I mean, it is very easy to read a headline boasting, BMNR owns 4% of the global Ethereum supply and assume the company is invincible.
Right. They sound massive.
They do. But leverage cuts both ways. They have $235 million in total liabilities right now, which seems highly manageable against $8.8 billion in assets.
But what happens if the crypto market does what it historically does and Ethereum crashes by 50% in a matter of weeks?
Well, if the assets get cut in half, the liabilities stay exactly the same.
But the borrowing costs against that shrinking collateral would spike violently.
Precisely. BMNR would be facing immediate solvency issues, the exact same mechanism that makes them look like a genius investment on the way up. Using borrowed money to hoard a volatile asset can trigger a corporate bankruptcy on the way down.
Wow. So taking that massive upside yield potential and those existential borrowing risks into account, what are the actual timelines the market is looking at?
Well, for the short-term outlook, over the next few weeks, the technicals are showing some positive momentum.
We mentioned the MACD turning positive on the short time frame on April 6th.
Right. And historically, for this specific stock, that signal leads to short-term gains 72% of the time.
Ooh, that's a solid hit rate.
It is. Traders are likely trying to ride the wave of the NYSE uplisting news to break through that $22 resistance level.
But the short term is just a pure momentum play.
Exactly.
The medium to long-term perspective hinges entirely on a stated corporate objective. BMNR calls the alchemy of 5%.
Yeah, this is fascinating.
It's their very public, very aggressive mission to eventually own and control a full 5% of all Ethereum in existence. Analysts are projecting that if Ethereum macro conditions remain stable and BMNR edges closer to that 5% dominance, the stock will experience a fundamental re-rating toward that $30 to $36 analyst target.
I have to challenge that strategy, though.
Really? Why?
Well, reaching 5% ownership doesn't just make them a large investor. It effectively makes them a central bank for the entire decentralized finance space.
Oh, wow. I didn't think of it like that.
Right. But calling them a central bank implies a level of stability that they just don't have because they are heavily indebted to achieve that scale.
So it's the ultimate high-wire act of modern finance.
It really is. They're trying to build centralized institutional dominance on top of a decentralized, highly volatile asset.
If they pull off the alchemy of 5%, they become one of the most powerful systemic players in the global crypto ecosystem.
But the timeline for that success is entirely at the mercy of macro inflation data, interest rates, and the broader market appetite for risk assets.
So to summarize the core tension we have unpacked today, BMNR is either the most brilliant, heavily discounted backdoor into Ethereum staking available on the public markets, or
It's a highly leveraged powder keg of volatility just waiting for a margin call to blow it up.
exactly, you have a stock trading below its book value, hoarding billions in digital gold, and launching a massive yield-generating platform on the NYSE.
Yeah.
But you also have deeply negative operational cash flow, confusing gap accounting mirages, and a business model heavily reliant on borrowing to fund a single volatile asset.
The traditional valuation metrics simply break when applied to what they're trying to build.
Yeah.
It requires an entirely new framework of risk assessment.
Which leaves us with a final provocative thought for you to mull over. We have spent time discussing the risk to BMNR's survival if the price of Ethereum crashes and their leverage turns against them. But let's flip the script and look at the broader blast radius. If BMNR is relying on heavy borrowing to chase their alchemy of 5% goal, what happens to the entire global Ethereum ecosystem if the single largest corporate holder is suddenly forced to liquidate its treasury in a massive forced margin call?
Yeah, what happens to the global market if $11.8 billion in Ethereum is dumped onto the exchanges in a single afternoon?
That is the true systemic risk that traditional analysts are completely failing to price into their models, and we want to know where you stand on this.
We really do.
Please leave a comment below answering that exact question. What happens to the crypto market if BMNR gets margin called? Remember, leaving your feedback in the comments is compulsory if you want to join the debate.
And while you're down there, hit that subscribe button and like the video so you don't miss our next analysis.
Once again, this deep dive is strictly for educational purposes and is not financial advice. We are just two people trying to make sense of the wildest numbers on Wall Street. Thanks for joining us, and we'll see you in the next one.